In this video, I will show you a trading strategy with moving averages that you will be able to use in any type of financial asset and in any time frame. In any case, it is recommended to use it in time frames greater than 15 minutes and mainly in Forex. In my case for the video, I will use it in the time frame of 30 minutes in the euro-dollar. The strategy is really very simple. The first thing you are going to have to do is select two exponential moving averages, EMA. The first moving average, we will configure it as 50 periods, we will change the color to blue, and we will increase the thickness to 3. The second moving average, we will configure it with 200 periods in red color. We will also increase the thickness to the maximum. The next thing we will have to do is look at the price. If the price is above the 200 EMA, we will only open purchase operations. Instead, if the price is below the 200 EMA, we will only open short trades. We have to pay attention to whether the 200 EMA has an upward or downward slope. We do not want to trade at times when the 200 EMA is flattened. We will open a buy trade when the price crosses the 50 EMA from below to above. We will place the stop loss below the last high-low, and we will wait to put the take profit when the price crosses the 50 EMA downwards. As long as we have had a benefit of at least 2:1, that is, we win twice what we risk. I will show you an example of a sell operation. We will open a sell trade when the price crosses the 50 EMA from above to below. We will place the stop loss above the last high, and we will wait to put the take profit when the price crosses the 50 EMA to the upside. As long as we have had a benefit of at least 2:1, that is, we win twice what we risk. Let's see some more operations. In this case, we will make a buy operation. We identify a trend, like for example this uptrend. We then wait for the price to cross the 50 EMA down and turn back, at which point we will buy. We will put our stop loss below the last big low and wait for the price to cross the 50 EMA again to take profits, always taking a profit of at least 2:1. Now, let's see an example with a sell operation. We identify the price below the 200 EMA. Remember not to trade sideways with the flattened EMA. It is also recommended that the 2 EMA, the 200, and the 50 go in the same direction to avoid failed trades. For example, in this case, they go in the same direction, and in this other case, they go to opposite sides. One goes down and the other goes up. We then wait for the price to cross the 50 EMA to the upside and turn back, at which point we will make a sell trade. We will place our stop loss above the last big high and wait for the price to cross the 50 EMA again to take profits, always taking a profit of at least 2:1. And ready! I hope this strategy has been useful to you. Do not forget that before trying it with real money, you need to try it in a demo account so that you can put it into practice by yourself. Do not forget to subscribe so as not to miss any strategy, as we upload the best strategies every week.